Hello and welcome to the Thursday, January 30th, 2020 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we are talking about analyst reactions to Tesla's Q4 earnings report. I have 15 of them to go through today, tried to round up as much as I could. So we're going to go in order from lowest price target to highest price target. I know whenever we talk about analysts, some people feel the need to give me feedback that we shouldn't because their opinions don't matter. Fine, I would agree with that for some analysts, a select group of analysts, but I do think some provide valuable information, and regardless of how valuable the information is, I do still feel like it's important to be aware of because if nothing else, it at least plays a role in sentiment. That being said, of course, today we have to check the stock before we get into any of this because on the day, Tesla finished up 10.3% to $640.81, obviously a new all-time high close. The Nasdaq on the day was up 0.3%, and Tesla continued to rise after hours another 0.5% to about $644 per share. All right, we will start off with Barclays, Brian Johnson. He has a $200 price target on the stock with an underweight rating after earnings, saying, quote, "With Tesla posting an earnings beat on top of seemingly unstoppable share price momentum since the surprise third quarter 2019 profit, the bull narrative has shifted from Tesla disrupting multiple industries to Tesla being a profitable and growing next-generation automaker. Even if one were to stipulate that as true, we believe the shares are sharply overvalued as an automotive OEM. While we remain negative on underlying valuation, we expect Tesla to feed the bull narrative regarding China, which is ramping production, batteries, where they can, quote, aim to target, end quote, dramatic cost reductions, and Model Y already in early production in Fremont, creating risk of a further upward price momentum, end quote." As the first analyst on our list here from lowest to highest price target, unsurprisingly, I don't agree with this. I don't think the bull narrative has shifted at all from Tesla disrupting multiple industries. It is just now adding the fact that Tesla can be profitable, which finally allows Wall Street to jump on those other bull narratives. Also, as somebody on the low end of the price target range, it's unsurprising that he is looking at Tesla's valuation in terms of other automotive OEMs, despite Tesla's ability to actually generate revenue from software, as well as the differences in the business model, like direct sales, solar, storage, autonomy. We could go on and on. Next up on our list is Citigroup analyst Ite McCally, reiterating a sell rating with a $220 price target, saying, quote, "We remain cautious on chasing the stock post the year-to-date run-up as we continue to see a number of flaws in the prevailing bull case," end quote. Unfortunately, I was not able to find any more of this note, so I cannot argue with those supposed flaws. JP Morgan's Ryan Brinkman is next with a $260 price target. This is increased from his previous price target of $240, but obviously still an underweight rating on the stock, saying, quote, "Tesla shares appear poised for another rally Thursday after the company modestly exceeded expectations with regard to fourth quarter 2019 results, roughly met expectations with regard to 2020 deliveries outlook, and genuinely exceeded expectations for anticipated start of production for the Model Y," end quote. Not so sure about your adjectives there, Ryan Brinkman. Tesla modestly exceeded expectations, yet they beat earnings by 30%, revenue by 6%, and free cash flow by, 130% or something like that? $600 million? Dang, I would hate to see what more than modestly exceeding expectations would look like. And then he says, roughly met expectations with regard to 2020 deliveries outlook, yet Tesla guided for a minimum of 500,000 deliveries, while the FactSet consensus was 468,000. So I guess 7% difference at the minimum qualifies for roughly meeting expectations. Obviously being sarcastic there, but he did get Model Y right, at least, saying it genuinely exceeded expectations for anticipated start of production. I thought his phrasing on this next one was nice too. He said, quote, "We had cautioned that fourth quarter results could be strong, including relative to free cash flow, given fourth quarter deliveries exceeded production, although we estimate first quarter is likely to track softer, which could finally prove a negative catalyst for the shares," end quote. It's almost like you can feel him hoping that that's what happens. I don't even necessarily disagree with the point that is going to provide some pressure for Q1, but probably not $260 price target levels of pressure. Next on the list is Bernstein. They have Tony Sacconaghi as their analyst with a $325 price target and weirdly a market perform rating, which I don't know if he is expecting the market to drop by 50% or what the deal is with that, but kind of a weird rating when you have a price target at half of what the stock currently trades at. Sacconaghi noted Q1 margin and free cash flow pressure as potential downside for the stock, saying, quote, Medium term, we see several key unknowns to monitor, including potential Model 3 cannibalization by the Model Y. On net, we believe Tesla is simultaneously too hard to short without a discernible catalyst. It is hard to fight a religious war after all, but also too expensive and risky to initiate a significant overweight, end quote. So there's our cult stock call out for the day. Always nice to get one of those. The cannibalization issue we've talked about before, so won't go into too much detail on that here. I do think there will be some, and that may provide some pockets of pressure, but it's definitely not a long-term issue in my mind. Next, we have Roth Capital, Craig Irwin. He moved his price target up to $350 from $249, but maintains his sell rating. Couldn't find any more details from a note there. So we have Adam Jonas after that at his $360 price target, which remains unchanged with an underweight rating still, saying, quote, "This quarter may be seen as the moment a new genre of tech investors were waiting to perceive Tesla through a new narrative. As a profitable and cash-generative tech company with a reasonably sized market cap in the same discussion as the megatech platform names," end quote. I don't have any more of this note to get the overall feel for the note, but some hints of bullishness there, at least in that sentence from Jonas. Next is John Murphy of Bank of America with a $370 price target and an underperform rating, saying, quote, "Good fourth quarter results don't necessarily justify hyperbolic run in the stock. While bulls on Tesla view the two most recent quarters as indication that the company has effectively transformed profits and free cash flow, we remain skeptical that Tesla has completely turned the corner and rather believe that growth may be accompanied by additional income and cash flow volatility," end quote. Personally, I'm not super bullish on Q1, but man, if Tesla can deliver a great quarter for Q1, there's a lot of opportunity for positive surprise here. If that can happen off of 2 quarters back-to-back of inventory reduction, so without having that sort of tailwind in the quarter, and off of federal tax credit going away in the US and the tax changes in the Netherlands, combined with ramping Model Y and Gigafactory Shanghai, and not to mention coronavirus, if Tesla could deliver a strong quarter with all of those things happening, that pretty much puts to bed the bear thesis, and really the only rational argument against Tesla would be valuation at that point. Next, it looks like we completely skip over the $400 range and we jump to Deutsche Bank, Emmanuel Rosner, with a $510 price target up from $455 and a hold rating on the stock, but saying that Tesla is, quote, "firing on all cylinders," end quote. Next, we have a couple price targets with no note details, but RBC Capital's Joseph Spock increased his price target from $315 per share to $530 per share, but maintains a sell rating. Then we also have Wolf Research with analyst Rod Lachey with a $615 price target on Tesla, which I believe is an increase, but I couldn't find the prior price target. Next up is one of my favorites, Ben Kallo from Baird. He has been bullish on Tesla for the longest time, and unfortunately he just downgraded a few weeks ago, saying that they were, quote, "admittedly battle-worn after a contentious 2-year period. We will wait for further execution to get more positive on the name," end quote. That downgrade was just to neutral from outperform, and they did also increase their price target at the time from $355 per share to $525 per share, which was still decently above the $480 share price of Tesla at the time. Anyway, up to present day, after earnings, Kallo increased his price target from $525 to $650 per share, keeping the neutral rating, but also saying, quote, "Musk lamented the lack of deep and accurate insight from Tesla analysts. Given our decision to downgrade when shares were about $150 lower, we accept the criticism," end quote. Kallo has been one of the biggest bulls for years, so I think he's a bit misplaced to take that criticism on. Next up, we get into the $700 range, so above the current share price. I guess Ben Kallo technically slightly above as well, but we have Wedbush Dan Ives with a $710 price target up from $550, and he also has a $900 bullish price target, but has a hold rating on the stock. Ives was discussing this on some station, I can't remember which one, but he had a few quotes here saying, quote, "I view it as a game changer in terms of this quarter," end quote, calling it an inflection point quarter and saying, quote, "I think right now this is a stock that starts to head towards that bull case $900, end quote. Why does he think that? Well, it's the two things that I always talk about as being the most important for Wall Street: profitability and demand. Next on the list, another one of my favorites, Piper Sandler, formerly Piper Jaffray, Alex Potter, who has moved his price target from $553 to $729, with an overweight rating, of course. And my favorite quote out of all of these notes, saying, quote, "It's becoming clear, in our view, that Tesla is on a path toward becoming the world's only relevant publicly listed automaker," end quote. Whew. I mean, I could tell that he wanted to have a higher price target when we had our discussion during that interview. And well, now he does. And that's a very powerful statement that I agree with. Two more on the list here. First, we have Canaccord Genuity's Jed Dorsheimer with a $750 price target up from $515, a buy rating on the stock, saying, quote, "We expect the upcoming battery day to help investors understand the lead Tesla maintains, as well as its energy density strategy. We also expect to hear more about the Maxwell dry electrode component of this strategy," end quote. Adding a nice little comment here saying, quote, "Given the numerous positive data points that were discussed and the cornerstone of continued profitability and free cash flow generation, we view the company as solidly positioned as the leader of the EV revolution," end quote. Not quite as vociferous a statement as Alex Potter's was, but I will take it nonetheless. All right, and then last on the list, we have New Street Research's Pierre Ferragu, who I do not believe has sent an updated note out yet after the conference call, but as of January 21st, he had issued an $800 price target for Tesla, which we had talked about previously. So that is it. Tried to get everything. If there are any that I missed, please let me know in the comment section below. I also wanted to point out, just in case you missed it, that Third Row released the second part of their Elon Musk interview, so be sure to check that out. I haven't had a chance to yet myself, but we'll probably talk about that tomorrow. Until then, you can find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the January 31st episode of Tesla Daily. Thank you.